Is the real estate market going to explode? I know that is a very loaded question, but I know a lot of people are concerned with the state of affairs right now. You know, you can go as deep into this conversation as you want, but what's your 30,000 foot view?
So explode in which direction? Downward, I guess, because that's kind of what gets the headlines, right? Is the bubble gonna pop? That's kind of what we talked about yesterday on the Bearded Minute Real Estate Show. The reason why we brought it up on our show is because the same guy that was shorting the subprime during, that's why I called The Big Short, if y'all seen that movie, he predicted that the bubble would pop. And that was the headline, it was all the rage. But when you look at what he said, there weren't a lot of reasons that he gave other than there seems to be a lot of liquidity in the market that is leading to allow people to put in offers that are kind of unheard of, closing appraisal gaps, doing full cash offers and bidding out traditional financing because of liquidity. People have cash. And his reasoning was the market is primarily driven 80% by the people that have cash and only 20% by what he called the fundamentals. And that's a good point, but I don't see a scenario, and I've replayed a bunch of scenarios, and there's really only one that sticks out in my head that could lead to a massive real estate market crash. What I foresee happening is that we'll see headlines that'll be doom and gloom, and they'll say home price gains slow. Well, they're still gaining, right? The reality is there's only been 2 recessions in the history of recessions throughout the US in which home prices have lost money. One of them, they lost negative 1.9%. And the other recession, they lost negative 19%. I'll let you guess when that was. Every other recession that we've had since they've been tracking it, home prices have actually gone up anywhere from 2 to 6%. So I think even if we were to be vaulted into another recession, homes would actually be one of the safe havens for investment and not one of the things that everything's crashing around it. In part because so many people are purchasing with cash, that means there's less debt involved in people's homes in the future. So if people did get in trouble, they have equity built into their home. Would they get every dime out of it in a dire situation that they put into it to pay for the home? No, but would still get a lot of equity out of it. We were talking about reports last year that there was over $2 trillion in US of equity sitting in people's homes. And so even in a dire, think the most dire situation, everyone currently in forbearance forecloses, right? So suddenly banks are holding all of these houses and can't continue to give loans. Well, a lot of the people they're giving loans to aren't able to make purchases anyway right now. But let's say that now they can't give any loans because they're holding all these properties. They have to put the properties on the market. That's going to be a huge relief to the inventory issue that we're seeing now. So in what scenario could we see a massive crash that doesn't also put more homes on the market and allows buyers to buy? You'd have to have a scenario in which all of the buyers right now are so frustrated with not getting their FHA offer accepted or government loan offer accepted that they sign 12-month lease agreements. Then massive panic, sellers throw their home on the market, and you have a massive amount of inventory coming on the market. And in those 2 scenarios, you have people with a ton of inventory and people that now can no longer make a purchase. So there's way fewer buyers, there's way more inventory, and it happens overnight or really close to it. That's a scenario in which I don't think it would be a crash. I think you would just see people start to lose. They thought they were going to make $50,000 when they listed, but they may only sell it for what they bought it for last year. That's a normal market.
Yeah.
Right. You normally can't sell a house for 50 to 90 to 100,000 over what you bought it for a year ago. Normally you have to wait 3 to 5 years. And you can sell your house and make more money out of it than the fees because you have the appreciation over time of, usually somewhere around 3%. So it's just very difficult for me to think of a scenario in which we all crash, but it doesn't also help the inventory situation. That's the problem.
Yeah. And I do think that brings up the point that I was saying earlier. In our industry, whether it's a buyer, a seller, or a balanced market, it's all good for us from the standpoint that we can operate in all 3 as long as you know how to operate in all 3. Buyers can succeed in sellers market, sellers can succeed in buyers market, and buyers and sellers can succeed in both. It's understanding, the waves and what's happening from the inventory perspective of when the consultant's approach to what we do really kicks in.